All right, good morning. Today is Friday, August 23rd, and I'll show you the first trade right out of the gate. I've shown you this trade setup many times in the past. This chart is the E-mini S&P 500 chart. Right, E-mini S&P 500 chart. Now, the chart I'm actually looking at is the continuous contract, the ES, right? That gives me the continuous data, and you'll see that there's a D there. It just stands for day data only, day session only. I actually trade off of, obviously, the regular contract, which is ESU 13, ESU 13U for the September contract, 13 for the year 2013. Now, this is yesterday's high, right? This is yesterday's high. Look at the market gap, right? This is where it closed yesterday. This is yesterday's high. Market opened up higher. So what are we looking to do? Okay, that first bar, once it forms, that first bar, we're looking to take a short trade as it takes out that low, especially in a gap. You gapped up. You're up through the high of the day. The second bar, you're able to take out that low. Your initial stop loss is directly above the high of that first bar, right? Once the market penetrates down through the low, right? Down through the low of that bar. And again, I'm using a 3-minute chart. You can use a 5 if you want. It's really up to you. I prefer to use a 3-minute chart when day trading the E-minis. So I went short as it took out the low of that first bar, anticipating that the market was going to fill that gap, and the market just filled that gap. Let me show you exactly what I did here. So the low of that first 3-minute bar was 1658 and a quarter. So as the market penetrated down through 1658 and a quarter, okay, went short, got filled at 58. Stop was 60 and 3/4, and I was looking to take that market down to where it closed. It closed at 1655 even, and look at that. The low of today is 1655. I typically put my profit objective about 2 ticks above, 2 to 3 ticks above where it closed to see to fill that gap, right? So it closed at 1655, so I used actually 1655 and 3/4 as a profit target. 55 and 3/4, which was actually the low of this bar, 55 and 3/4. All right, so let me reiterate this trade for you real quick. Market gapped higher, right? Closed right here yesterday. This was the high. Opened up through the high, which I love. Took the range of that first bar, shorted the market, got filled, so sell at 1658. Right, the ISL, the initial stop loss for this trade, was above the high. It's 1660 and 3/4. We're still a little bit more than I typically like. Risk 2 and 3/4. The first profit target, actually I took everything off there, was 1655 and 3/4. So this trade made what, 2 1/4? Not bad right out of the gate. Again, this is a pretty high probability trade. Like to see that gap. Patiently wait for that first bar to be put into play. Look to sell it as it takes. Now look at, as the market breaks down through the low, you could wait, and you could wait for a little pullback to get your risk even less. So if you know that your initial stop loss is going to be placed above that high, right? So you could wait for that penetration and then wait for a little pullback. Look to get in at a little better price. Now, if you do that, the only disadvantage with that is missing the trade altogether if the market continues to move lower. But it's a probability game, and the probabilities definitely favor that the market's not only going to penetrate through this low, but it's going to give you a little grief. The market's actually going to pull back a little bit. So if you were to sell it up in this area, keeping your stop above the high, you know, that's going to happen a majority of the time. Just remember, you never, ever want to stop yourself out. I've told you this a million times. At halves or round numbers. Okay? So again, look at the high of that bar was 1660 and a quarter. 1 tick above it, right? 1 tick above that high is 1660 and a half. So I went to a 3/4. So that was that trade. So not bad. The market filled the gap. Now remember, market opened up at 1660. The market closed, right, at 1655. Market gapped up 5 points. So again, probabilities favor that the market will in fact come back down to try to fill that gap. So you've got to wrap some rules around that particular trade. I personally like to see gaps above or below the prior day's high or low. Wait for that first bar or two to form, and then look to get that penetration. Put that stop in the other extreme, and look to ride that. So not only was the market not only was the close of 1655, but that was right at the 50 exponential moving average as well. And so, right, this is where it closed. The 50 exponentials right there. And again, I like to typically go, 2 to 3 ticks above the actual close. So that's where we got that 1655 and 3/4. It was three ticks, right? 75 cents above it. So that was not a bad trade. Now, look at what time it is. It is almost 10 o'clock in the morning. I typically wait to see what the bias is going to be by looking at that first half hour. And obviously the bias is down right now. We filled that gap. So I believe we're at a critical level right now, right? As you know, this purple line is the 200 exponential. This is the 50. What we could do here, let's do this. All right, a little much here. The low of yesterday was right here, so right. So we can measure the fibs from yesterday's low to today's high, right? And if you do that, take a look at that profit objective I used, right? 38.2% retracement, that big swing too. So we came. So look at this is where it closed, 1655. 3 ticks above it was basically the 38% retracement of the bigger swing as well. So that was good. But again, we're at a critical level right here. And if we start breaking down through these lows, then I would expect the market to drop and try to retest this daily pivot at 1652 and potentially, the 200 as well, which right now is sitting at about 51.25. So that's what I'm looking at here. Critical level. We start breaking down through these lows. I think we're going to continue going lower on this Friday afternoon. So let's see. Can I show you one other thing here? I know it's long. It's a 7-minute video, but I'm going to give you a little bit more. Let's go to here. I'm going to show you a classic trade setup. Ran my scan, found this. This is in the oil sector, Murphy Oil Corp, right? It's a stock, MUR. This is a daily chart, okay? Look at this. Market's in a nice uptrend, right? Market really took off, right? Along with the oil market. Put in this high. We've had a nice, clean, crisp move to the downside. We are back right now at the 50 exponential moving average. And if you take it a step further here, let's draw our fib retracements from this low here to this high here. Take a look at that, folks. We've got the 38.2% retracement sitting right here. The 50 is right in here. But more important, look at we're at a critical support level. Trend is up. Let's pull back. We've got an inside pattern, right? Lower high than the prior. Right, yesterday's high was lower than Wednesday's high, and the low was higher than Wednesday's low, right? So this is the trade setup right here. I am looking to buy this market. I'm actually going to go to 67.51, 1 penny above the half. 67.51 is where I'm looking to buy. 67.51. And if that's taken out first, then my stop would go immediately below the low of yesterday's low of 1663. Now, right now we're trading at 66.86. So if the market takes out the low first, but then reverses and takes out the high, I would still look to go long. So if the market drops down, takes out yesterday's low, but then reverses intraday and is able to take out that 16 or 67.51, I'd still go long. In that case, my stop would go directly below the low of the intraday low. On the other hand, if the market's able to take out the high first, my stop would go at 66.63. Okay, so it's that simple. So take a look at MUR. MUR, again, I'm looking to buy it at 67.51 regardless. So if it takes out the low first and then reverses and penetrates up through 67.51, I'd be long. All right? Any questions, let me know. Have a profitable day and have a fantastic weekend. Bye for now.